Something big just happened to your bank account. If you're over 60 or you hold a green card, there's a new banking rule in 2026 that could quietly change how your money moves, how banks watch your transactions, and even how easily you can access your own funds. Most people haven't heard about it yet, and those who have are still trying to understand what it actually means for their daily banking life. Imagine logging into your bank one morning and noticing a delay on a transfer, a request for extra identity verification, or new reporting rules attached to your account. These changes are not random. They are part of a larger financial shift that banks across the country are slowly implementing. The surprising part is that many retirees and permanent residents are the ones most likely to feel these changes first. So before your next bank transfer, withdrawal, or international payment, there are a few things you need to understand about what's really happening in 2026. Why this 2026 banking rule was introduced. Behind every new banking rule is a bigger story, and this one is no different. Over the last few years, financial regulators have been tightening oversight on how money flows through the banking system. Governments and financial authorities are increasingly concerned about fraud, identity misuse, international money transfers, and the growing complexity of digital banking. As a result, new regulations are being introduced that require banks to monitor accounts more closely, verify customer identities more frequently, and report certain transactions more carefully than before. For many people, this may simply mean a few extra verification steps. But for individuals over 60 or those holding permanent residency status, the changes can feel more noticeable. Banks are adjusting how they review account activity, especially when it involves retirement savings, cross-border transfers, or accounts that have been open for decades. The goal is security and transparency, but the real-world experience can sometimes feel like new barriers to accessing your own money. What exactly changes under the new rule? The most important thing to understand about the 2026 banking rule is that it doesn't necessarily take money away from anyone. Instead, it changes how banks handle verification, reporting, and account monitoring. In simple terms, banks may now require more frequent confirmation of identity, updated residency documentation, and clearer records of certain financial activities. For green card holders, this can sometimes mean confirming immigration status or residency details during routine banking reviews. For people over 60, especially retirees managing pensions, savings, or Social Security deposits, banks may apply additional security checks designed to prevent fraud or unauthorized withdrawals. These checks can appear as temporary transaction holds, requests for updated information, or extra verification steps when moving larger sums of money. While these procedures are designed to protect account holders, they can also surprise people who have been using the same banking routines for years without any interruptions. Why seniors may notice the impact first. One of the reasons this rule is attracting attention is because older adults are often the first group to notice the changes. Many people over 60 rely heavily on bank transfers for retirement income, pension deposits, healthcare payments, or family support. Because these transactions can involve regular monthly deposits or occasional large withdrawals, banks sometimes flag them for additional review under updated monitoring systems. Another factor is that financial institutions have increased their focus on preventing elder financial fraud. Unfortunately, seniors are frequently targeted by scams, which has pushed regulators and banks to create stronger safeguards. While these protections are important, they can also create moments where legitimate transactions are paused until verification is completed. For someone who has been banking the same way for decades, these interruptions may feel confusing or unnecessary. But from the bank's perspective, they are part of a larger strategy to protect accounts from increasingly sophisticated financial scams. What green card holders should pay attention to. For permanent residents, banking rules often intersect with documentation and residency verification. Financial institutions periodically review account records to ensure that personal details, identification numbers, and residency information remain accurate. Under the 2026 rule adjustments, these reviews may happen more frequently or require updated documentation. This doesn't mean green card holders are losing access to banking services, but it does mean banks may request confirmation of certain details more regularly. For example, some institutions may ask customers to confirm their address history, provide updated identification, or verify tax information tied to their accounts. These steps are largely administrative, but they can feel surprising if someone hasn't been asked for updated information in many years. The key point is that these checks are becoming more standardized across the banking system, meaning customers may experience similar requests regardless of which bank they use. How your daily banking experience could change. Most people won't notice dramatic changes overnight, but small differences may begin appearing in everyday banking activities. Transfers that once processed instantly might occasionally require an additional confirmation step. Certain withdrawals or international transfers may trigger automatic security checks. In some cases, banks might temporarily hold a transaction until identity verification is completed. These changes are part of a broader move toward what financial institutions call risk-based monitoring, where transactions are evaluated using automated systems designed to detect unusual activity. For many customers, the process will remain smooth, but there may be moments where the bank simply wants to confirm that the person initiating a transaction is truly the account holder. While this may feel inconvenient at times, banks argue that these steps significantly reduce fraud and unauthorized access to accounts. The smart way to stay ahead of these changes. The best way to handle any new banking rule is to stay informed and prepared. Keeping your personal information updated with your bank can prevent many verification issues before they happen. This includes making sure your contact details, identification documents, and residency information are current. If your bank contacts you asking for updated records, responding promptly can help avoid transaction delays later. It's also wise to regularly review your account notifications and security settings, especially if you rely on online or mobile banking. Understanding how your bank communicates about verification requests can help you distinguish legitimate messages from potential scams. The reality is that banking systems are evolving quickly, and customers who stay informed are far less likely to encounter problems when new policies are introduced. Final thoughts. What this really means for your money. Despite the dramatic headlines surrounding the 2026 banking rule, the core idea is actually quite simple. Banks are becoming more cautious about how money moves through their systems. For seniors and green card holders, this may translate into a few extra verification steps, occasional requests for updated documentation, or brief pauses on certain transactions. These changes are not about restricting access to your funds, but about creating stronger safeguards in an increasingly digital financial world. Still, awareness is essential. Knowing why these changes exist and how they affect everyday banking can prevent unnecessary stress or confusion when they appear. As financial regulations continue to evolve, staying informed will remain one of the most powerful tools any account holder has to protect both their money and their peace of mind.